This is Expert Advantage, a behind the scenes look at how JD Power experts help our subscribers and our clients turn actionable market intelligence into strategic advantage. I'm your host, Michael Vermillion with JD Power. Today I'm joined by Steve Crewdson, Managing Director in our insurance practice. So, Steve, let's dive right in. What's the biggest industry challenge that you see today in the auto insurance industry?
Yeah, from my purview, working with dozens of personal lines auto insurers, the number one challenge right now is definitely profitable growth. How to grow profitably and maintain a healthy insurance business while doing so.
So you've been in the industry for 25 years, JD Power 15 years. You've worked with a lot of our subscribers and clients, actually probably most of them in the insurance practice, um, really helping them connect the dots between our data and our insights back to actionable strategies on their side. So kind of given that extent of your experience and expertise, what's the biggest misconception you see companies making today when it comes to profitable growth?
Yeah, good question, Mike. I think when we're looking at the broader industry, there are always going to be exceptions, but across the industry, as the market is softening, we're going through the normal hard market into soft market cycle. Insurers are looking to grow, and they're placing almost all of their emphasis on new customer acquisition as the way to growth. But there's a lot more to growth, especially healthy growth, than just customer acquisition. And I'm seeing a few insurers act on some of the other levers to healthy growth, but far too many have solely focused on acquisition. So a little bit more detail on that. After the last 2 to 3 years of backing off from customer acquisition during the hard market cycle when inflation was driving up the cost of claims, right now and I'd say over the last year to 18 months, certainly been back into aggressive growth mode. And they're, as I mentioned, really leveraging new customer acquisition to get there. By way of example, advertising spend has nearly doubled over the last 2 years. But some of the tough lessons that were learned during the recent hard market cycle are kind of being left by the side. Think about underwriting discipline, things like that. And really, right now, growth being the number one issue, there's not as much attention as there could be on some of the other drivers of growth, which are retention and really expanding the share of the insurance customer's wallet that the insurer has.
Yeah, so what do you think is really driving that? What's behind this kind of lack of focus on the other drivers of growth? What are companies missing?
Yeah, I think what many are overlooking is that there are other drivers to growth. I think that our industry really focuses so much attention on customer acquisition because it is a fairly high retention industry compared to some others. And the main lever they feel that they can pull is just bring in more new customers and we'll grow that way. Our data for 25 years has shown that retention is a powerful driver of growth. And of course, so is growing the share of insurance wallet. So let's just start real quick with acquisition. When the focus is strictly on acquisition, some of the internal metrics that insurers are using will move right and focus right in on the new number of new customers they're winning, the cost to acquire these new customers, and some other basic kind of new customer acquisition metrics. What's then left out of the discussion at many insurers is, are we acquiring the right customers for us? Not every insurer wants the same type of customer. And it can be difficult to explain to executives if you're working with an insurer, or even for executives to explain to their board why the company might be throttling back growth a little bit to ensure they're getting the right mix of new customers and that those customers are aligned with their company strategy. So sometimes growth at all costs wins the day, but when insurers are considering models like customer lifetime value and the future value of a customer, they really win the customers that are more aligned with their strategy. And then by doing so, it becomes somewhat of a self-fulfilling cycle of you grow faster because you're winning the right customer that you're more likely to retain. So that takes us to retention. We've all heard the old adage that it's 3 times more expensive to win a new customer than to retain one you already have. And that really is true here in the insurance industry. So the average insurer is likely to use 15% of its personal lines auto insurance customers this year. And many of those customers are exactly the type of customer that the insurer wants to write. They put a lot of effort into winning that business and they're going to lose them anyhow. there just isn't as much focus as there could be placed on how to retain those customers and in doing so drive further growth than what they're getting just through acquisition. And lastly, we touched on really quickly the share of insurance wallet. We all know that winning a new auto insurance customer is a very expensive proposition. And I'd argue that just winning their auto business and leaving other coverages like home or renters or umbrella, many other policies that the customer could buy from the insurer, really only adds to the problem for insurers. In essence, spending a lot to win a customer that you really haven't optimized growth with. So winning a larger share of that customer's insurance wallet not only helps justify the initial cost of acquiring the customer, but it brings in more premium revenue to the insurer, which means more profit when the products are priced appropriately, and also builds a stronger relationship with the customer and their household.
Great. So let's now connect that back to JD Power's data. Where does actionable market intelligence come into play?
Yeah, I started my career here back in 2000, and right when we were launching into the insurance industry. So I've seen that for over 25 years, we've been studying the behaviors, attitudes, and perceptions of auto insurance customers here in the US. And while there are many themes that have held true across all that time, each year we tend to find things that are changing in the market and the types of things that insurers really need to activate on. If they do so, they can find a competitive advantage over their peers. So we currently have about 12 products evaluating the customer experience in the property casualty space and speaking with leading insurers every day on how they can drive not only growth, but better customer relationship through the data that we have. And in doing so, grow profit at their companies.
Can you share an example just from the work that you've done with our subscribers and clients? Maybe a company that got it right, and what changed for them?
Yeah, great question. Over the years, there's been so many companies that you've seen the light bulb go off. So after years of talking with them, you'd seen kind of some shift in the mindset, and then many times a light bulb goes off. So one thing that comes to mind is during a presentation of our claims research, I heard the CEO of an organization say, we're no longer going to offer this really low limit of rental coverage for our customers. We're getting rid of that today. He saw in the data how much that was negatively impacting the relationship their customers had. Think about, you're having a claim, you have rental coverage, and you find out that there's a limit on how much the insurer will pay that doesn't even come close to getting you a replacement vehicle that suits your family's needs. So he made the decision on the spot. Of course, the CFO was kind of not happy about that, but he said in that moment, no, based on what I've seen in terms of the effect on the customer experience, we're changing that right now. No more having this lower limit. Also, things that other insurers have I've seen other insurers do is really some have used our data in rate filings so they can get some new novel idea approved by insurance commissioners, and also seen very significant changes in distribution models. So insurers growing into new channels, maybe enhancing some of the channels they have based on the data that they get from our studies and talking with experts here at JD Power. So on that point of distribution channels, I want to raise one specific example. Recently, in the last 2 or 3 years, there's been more focus on than we've seen in the past on improving the experience customers have through digital channels. So when I say digital channels, think about website, mobile app, etc. And our insurance digital experience study is essentially a mass user experience study that is layered in with expert insights to help insurers stay ahead of the curve with their digital channels. And a few subscribers to that study over the last, like I said, 2 or 3 years have really put a lot of focus on improving their digital channels and using the insights from that study along with the experts here at JD Power. And not only did they see better scores in their JD Power results in subsequent years, but they've also come back and told us that they've seen better conversion rates in their sales channels, their digital sales channels, and they've also seen better containment in their digital service channels. So a win-win for the customer and a win for the insurer when customer has a better experience and the insurer is finding that their digital channels are better able to win and retain new business.
So, Steve, as a JD Power industry expert, how do you personally work with our subscribers and our clients to move from data to better decisions?
That's actually my favorite part of my job. What really gets me motivated is going past the data to helping insurers see what it can mean for the business and how to activate on it. So one thing about our insurance studies is we don't just report data and then leave it to the client to decide what to do with it. Our studies show the impact on customer experience when specific elements change. And from there, we can show the impact on retention, advocacy, and other metrics that drive insurer growth and profit. All my colleagues and I really combine the data with our own experiences in the industry to help clients not only make sense of the data, but to drive actions that improve the results for their business.
So when this is done right, what actually changes? What are the outcomes?
Wow, when they do it right, a lot changes. I've seen executives take a completely new stance on the importance of listening to the customer and crafting an experience that fits their needs, not only as a talking point, but as a true competitive differentiator. I've been able to see the culture of organizations change over the span of my career and to become more customer-centric, and I've seen improvements in the business results as an outcome. Ultimately, insurers who get it are less consumed by the extraneous things that don't matter for their business and put the focus right back on what matters the most, the customer themselves.
Okay, so just to wrap up then, maybe leave us with one thing that leaders consistently get wrong, and what should they do differently?
Yeah, it kind of pains me to say this, but I think it needs to be said. Oftentimes, we'll hear from, especially a newer client, that they think the data will end up being an easy button for their organization. So sometimes leaders will say, we've acquired the data, we're not seeing enough improvement, what's wrong here? We have all this data, we're not improving. And to that, I really want to say that the data will only help lead to better decisions and better actions, but the data alone do not make the decisions or take the actions. Success really comes from using the data and the experts here at JD Power to drive the customer-focused changes that are needed at the organization. So the heavy lifting still rests with the leadership at our clients. There's really no easy button to improving the experiences customers have, and likewise to improving the insurer's business outcomes. So I'd like to think it becomes easier when your decisions are backed by data and experts, but the hardest work is still done by the executives and the leadership teams at the insurer.
Steve, thanks so much for joining us today on Expert Advantage.
Thank you, Mike.
And we want to thank our viewers and listeners as well. If you're looking to turn actionable market intelligence into strategic advantage, JD Power's experts are here to help. I'm Michael Vermillion with JD Power, and we'll see you next time.